It's Wednesday, 27th of February, 2019. Looking at the dollar index, I've talked about this for a little while now, well, a long while. It's been a big pattern that's building. So we've had a good rally up, and we had topping out in the summer of last year, which I believe could be a left shoulder to a head and shoulders pattern. We then have this nice big head pattern here through October to January of this year. Let me just open this up a little bit so we can see it more clearly. Okay, there we go. So there you have your the whole top formation as a bit of a rounding top, really. And then what I speculated could be a right shoulder to a head and shoulders topping pattern. When I saw this negative candle here, I suggested we topped out. I didn't suggest a short, really. I suggested the safest thing to do is wait and see if this pattern does play out. But if you did sell into a short on this negative candle, you've done well. So obviously this was going to be a support area, the moving averages, and it did the job perfectly for 1, 2, 3, 4 days. And I said we're going to need to break below this area if we're going to come down and test the neckline to the head and shoulders, which is also where we meet the red 200-day moving average. So it now looks like that process has started. This did do the job of support for a while. We're now breaking down as I speak and heading towards support at 95.60, 95.50. This will be key. Initially we might bounce off there. Who knows? We might even get back up to the 96.40 area. But a break below 96.50, 96.40 will, 95.50, 95.40 will confirm the completion of the head and shoulders pattern, and that will be our sell signal. Now, as I scrunch the chart up, just want to show you the 23.6% fib at 95.44. So I would suggest the break below there would just be the absolute perfect confirmation that the neckline's been broken, and down we go. You always got to check the longer term charts. The 200 week moving average is at 95.86, so we'll need to get through there for confirmation on the weekly chart that we're going lower to 95.60, 95.50. There's the little neckline on the weekly chart there too. We've been long the dollar versus the Swedish krona, which was working quite nicely, but I must admit I hadn't got this position on because I missed buying it down here. I was waiting for around the 9.15 area and only got to 9.18. So I hadn't kept my eye on this. I see that in the last few days we're pulling back again, so this is getting a little bit boring. Let me just throw, if you are long this trade and you're being patient with it, let me just throw a trend line on here. Okay, so we've got the midpoint of the Bollinger Band at 924.60, and then we've got the lower trend line at 921.50. So we really want to stay above 921.50. If you're long, I would put a stop in below 921.50 and just forget about this if it gets down below there. Maybe we'll get a retest of the trend line and it would be worth jumping in again at 9.15, 9.13, but at the moment this trade isn't performing particularly well this week. What is performing well is the pound against the Swiss franc, which we've been looking at for quite a while. We had the little break above the flag, which I better draw back in. There we go. This is where we were looking. This is where we were getting long, and that's worked really, really well. So yesterday we took off through this trend line, which goes back to July 2018. You can see joining the peaks, the 3 peaks there. So the break above here was significant, and you got a fantastic reaction. Any shorts being stopped out, of course, but we were long, and that looks pretty good. I actually got out a little bit too early. I took my profit at 132.10 after some negative short-term candles spooked me, but that was a mistake, and we're now up to 132.50. We've been up to 132.80. So this looks pretty good. There's no reason why we will not continue higher. Certainly on the daily chart, I see nothing to stop us. Aha, just throwing some fibs on here. 61.8 is at 132.63. So you can see this is why we're stalling. We're stalling at the 61.8% fib, and that also coincides with some highs around June of July of last year. So we are overbought in the short term. There is a possibility of a pullback. Clearly we're going to have to get up through 132.80 to get through these previous peaks and the fib resistance, well, and yesterday's high, of course. That should then put us on a nice leg higher, but 133.30 would be the target, the 200 week moving average. We'll have to watch what happens there. we'll be pretty overbought on the daily chart by that time. So again, we might get a pullback and take a longer run up at that resistance. I'm just going to have a look at where we can jump back in again if we do get a pullback at the moment. Okay, hourly chart for the pound versus the Swiss. There goes my phone. Must remember to put that on silent next time. Okay, we've got a very minor support at 132.15.10, but the big support, the best support, is down here at 131.80, 131.70. Now I've got a decent enough trend line going back to the 13th of Feb, and we've got the 23.6% fib. So I would use that as an entry point today. If we get down there, we don't have any nice moving average support. I don't think the 100-hour moving average is going to get up there by the time we reach it. But what would work is if we break lower. If this doesn't work, let's say we get stopped out below 131.60, it's worth it buying it at 131.80, 131.70, stop around 131.60 or just below, and then look to buy again at 131.15, 131.05. We'll have a good Fibonacci support area there. It'll just be above this, the peak of the week. Of last week, sorry, 131.00, and we'll have a little bit of 100-hour moving average support there as well. I don't think we'll get down there, but if we do, that would look like a really nice buying opportunity. Aussie versus the US dollar, often a good market to trade, but lately this has been horrible. Really just going sideways, no clear pattern. By the way, this head and shoulders pattern, I'm not sure if that's relevant because these things have to appear within the scale of a previous bull run, and that really isn't a strong enough bull run to make this relevant. You see this a lot on Twitter. Everyone's talking about, oh, this is head and shoulders pattern, but they don't put it in the right context. So the only trade that I see worthy of an attempt in the Aussie versus the US would be a short at this trend line, which goes back to April 2018, so a decent length, and it's been tested a few times and held. This comes in at around 72.35, and then you've got the 200-day moving average at 72.55. Well, it's going to be a little bit lower by the time we get there. Could be 72.50. So 72.35, 72.50 would be the resistance to watch, and then you can stop above 72.70. So it's a pretty low risk trade, and if it works, we'll head back down to at least 71.65.55. You can see this cluster of support here, which worked on the way up. It'll probably work on the way down. But if we do get below 71.30, which we probably will do eventually, then we'll see a lot further moves to the downside. So this is definitely worth a trade worth trying. New Zealand dollar, this is the weekly chart. We've got a trend line going back to June 18. We've got the resistance coming in at around 69.30. And then we've got the 200-week moving average at 69.40. So that looks like a pretty good resistance area to me, worth giving it a shot. If we break higher, we've got the 100-week moving average at 69.85, and then we've got the 500-day moving average at the same price, so that would be another big resistance level. Okay, and in case you missed my earlier videos of the week about gold and silver, gold topped just below this 5-year trend line at 13.55. So the long upper wick of that candle from last week indicates that the market has topped in overbought conditions, and we've got this evening star 3-candle pattern here, which should be a sell signal reversal pattern. Note how we topped exactly at this trend line going back to November as well. So this all looks pretty negative to me. We haven't seen any follow through so far this week from that pattern, that negative pattern and that reversal, but I think it's coming. I think it is worth holding on to a short position. We are just holding on to this very minor 23.6% fib resistance around the 1330, 1331 area. So that should keep the market under pressure. We do have good support down here at 1320, 1319, and I'm pretty sure if I stick a trend line on here, like that, yeah. That trend line comes in right on that 1320, 1319 support area as well. So maybe we will bounce off there on the first test. If you're a scalper and you're just like a short-term trade, maybe risk 3 points to make 10, which would certainly be a trade that's worthwhile. You could try along there and see if we bounce back up to 30 and then get out. No guarantee that that will happen, but a break below sort of 1317 should signal further losses to to 13.4, the mid-teen area, 13.14, 13.15, 13.11, and eventually down to 13.04, 13.02. I fancy moves to the downside. This is the only thing that might hold us up in the very short term. Silver, if you need some reminding, we have a really nice negative pattern here. Double top on the weekly chart. We've got these long tweezer top type things going on here. 100 week moving average at 16.16. We've got the trend line just above here that goes back to Q3 2017 at 16.26. So it's not a real surprise that we've reversed from here. And if you look at the daily chart, this also backs up the negativity. Well, the double top there is significant, especially with these long upper wicks. 500 week day moving average at 16.18, so that's another resistance level. The trend line just above at 16.25, which goes back to where is it now? There we go. Q3 2017, same trend line. Okay, so this looks pretty negative. I'm short silver. I'm looking for this to dump. We've just gone sideways this week, but I think we will go lower. I'm going to add to that we've got 100 and 500 hour moving average at 1585, 1580 in silver. So if we manage to sustain the break below 1580, that should be the next short-term sell signal.